Hey, I'm Andrew Jones with CIR Realty here in Calgary. I work with a lot of families, helping them move up and down in the market, but a huge portion of my business comes from investors. Whether it's your first rental property or your 10th, I also do a lot of work with suited homes and multifamily properties. And this is the May report based on the April data. If you're thinking about investing in Calgary right now, you need to watch this because the story is very different depending on where you're looking. The detached market is telling one story, the condo market is telling a completely different one, and I'm going to show you exactly why one of them is a trap right now. Let me start with the bigger picture. Calgary's detached market right now sits at 1.73 months of supply. For anyone new to real estate terminology, that's a balanced market. It's not a screaming seller's market. It's not a buyer's market. It's right in the middle ground. And that middle ground is where discipline really matters. Here's what balanced actually means in April's data. Year over year, detached prices are down 2.28%. Sales volume is down about 11%, but inventory hasn't exploded. We're not sitting in a buyer's market with months of supply climbing into the 4s and 5s. We're steady, and steadiness changes how buyers and sellers need to think. For sellers, here's the uncomfortable truth. The market is not increasing. If you're sitting on a detached home and you're hoping for appreciation, multiple offers above list, that window has pretty much closed. What's happening instead is this. Properties that are priced in reality and presented well are moving quickly. Properties that are overpriced and don't show well are sitting. The difference between a fast sale and a slow one comes down to the pricing strategy in the first 2 weeks that you're on the market. For buyers, the inverse applies. There's not a ton of inventory out there. You might feel like there's no deals to be had, but here's the reality. If the property is the right fit for you and it's priced fairly, you need to move quickly. Not with an offer that's way over list. That's not always the smart decision, but certainly at fair market value. The buyers who are patient right now are being patient because I think they're looking for a unicorn. The buyers who are moving are the ones who found something that really makes sense for them. So what does that mean for investors specifically? Because that's where things get really interesting in this month's data, and I'm about to cover that. Let me tell you exactly what I'm seeing in the apartment market, because this is where my honest advice to investors gets a little uncomfortable. The condo market has fundamentally broken. Sales are down 27% year over year. Prices are down nearly 9%. And inventory is sitting at 4.44 months of supply. For context, that's the highest we've seen in 7 years. On the surface, some investors look at this and think, hey, prices are falling. This is a buying opportunity. It's time to swoop in. I'm going to tell you why that's the wrong decision. The problem isn't the price. The problem is the income. Rents in Calgary are compressed right now because there's so much new construction supply hitting the market all over the city. You've got buildings coming online in Bridgeland, in the Northwest, downtown, the new suburbs in the far north and the deep south. Some of these are even purpose-built rental towers. And all that supply is pushing rents down. At the same time, your condo fees aren't going anywhere. They're not dropping, they're staying flat, or they're likely climbing due to inflation. So here's the math that breaks the deal. You buy a condo at a lower price thinking it's a steal, but your rent potential is lower. Your condo fees stay the same. What gets crushed? Your cash flow. And in real estate investing, cash flow is everything. Let me give you the hard truth right now in Calgary. It is cheaper to rent a condo than it is to buy one. Think about that for a second. If you're considering buying a condo, not as an investment property, but as a place to live, and you're only planning to stay there for 2 or 3 years, you're probably better off renting, saving your money, and then buying a home that you can stay in for the long term. A larger townhouse or a single family home, something with no or low condo fees that aren't eating away at your equity every single month. So if condos are off the table for investors right now, what should you actually be looking at? Here's my honest read on what investors should be paying attention to from the May data. Detached homes in certain parts of the city are still in seller's market territory. The North and the Northwest and the West, these guys are sitting at about 2 months of supply, with prices actually growing year over year. Now, detached homes aren't typically the first thing investors think about when they're building a rental portfolio, but if you're looking at suited homes or properties that you can rent to families, these areas are strong. Other property types worth paying attention to is the row townhouse market. They're sitting at about 2.89 months of supply citywide. Prices are down 7% year over year. For investors, that's interesting because you're getting you're getting an attached product, which often means slightly lower maintenance costs and property taxes than in a detached home. Your fees are minimal and your rental potential isn't being crushed by new construction supply the way that it's happening with condos. But here's what I'm actually telling most of my investors right now. Save a little more money. If you were thinking of buying a condo as your first rental property because it feels more attainable or affordable, I'm telling you to wait. Put that money aside for 3, 6, 12 months, buy a detached home instead, or buy a row townhouse in a solid neighborhood where the rental market is healthy. You'll thank yourself in 5 years when you're collecting rent without high vacancy rates destroying your cash flow. And if you're an investor who already has 1 or 2 properties and you're looking to add to your portfolio, the market's not screaming buy now. It's actually just saying be selective. There are properties available right now that make sense as rentals. The ones that don't, sit. So make sure you're one of the smart ones that's doing your homework. Before I wrap up, let me show you one more thing that might surprise you about which areas are actually moving in this market. I could spend about an hour breaking down every district of Calgary, but let me give you the one that stands out to me this month. The West is the only district showing year-over-year price growth. 1.4% in total residential, but detached specifically is up 2.28%. And it's sitting at the lowest months of supply in the city at 1.73 months. Everything else is softer. The East is down 3.8%, the South is down 2.1%, but the West is holding and actually gaining a little bit of ground. If I'm an investor looking at where the market actually makes sense, the West is where I'm paying attention. Not because it's going to the moon, but because it's the one district that's not losing ground right now, and that tells me that there's some real demand there. People are still moving to West Calgary. Prices are slightly climbing. Inventory is still tight. That's the market that I want to be in if I'm deploying some capital right now. So here's what I want you to take away from this May's market report. The detached market is balanced, which means discipline wins. The condo market is broken for investors because cash flow doesn't work. If you're thinking about investing in Calgary real estate, you've got options. Detached homes are strong in some areas. Row townhouses are a good alternative. And honestly, waiting and saving until the fundamentals line up a little better is not a bad idea. I know that's not the most exciting advice, but real estate investing isn't about getting excited. It's about making long-term financial decisions that make sense. Whether it's your first rental or your 10th, the math has to work. If you found this helpful and you're thinking about Calgary real estate, whether you're buying, selling, or investing, I'm here. But more than that, if you're looking at these numbers and you want to understand the way they actually make sense for your situation, that's a conversation worth having. No pitch, no pressure, just a conversation. My contact details are below. Thanks for watching, and I'll see you next month with the June market report.